It is another volatile day in the market. Tech is getting its shit kicked in with the exception of Netflix. We get the 30-year bond at 5.1%. Jay Powell is trying to sound all sunshine and rainbows, but I ain't buying it, and I know Kevin isn't either. We're going to be discussing all of that and more today on Money Never Sleeps. Welcome back to Money Never Sleeps, everybody. Before we get going, do us a solid. Hit that like button down below. Subscribe to our channel. Nothing Kevin or I say is financial advice. We're a few guys who love following the markets, but please do your own research for making any sort of buys or sells. Kevin, interesting day here in the markets. We see Netflix absolutely ripping after their earnings yesterday. Tesla getting kicked in the teeth after their earnings disappointed. Tech is getting dragged down. We're seeing a lot of whipsawing back and forth between major indexes. The VIX is over 20. The dollar's taking a little bit of a hit. Jerome Powell can't seem to make up his mind on what the fuck is going on. Asia is ready to collapse. The war in the Middle East is getting worse. Anything else I need to add on that list of some of the shit we need to talk about today?
The
Winklevoss twins are getting sued. We love that. Where's my fucking money? So we found out the New York AG filed a lawsuit against them and that dillhole Barry Silbert. Once again, where's my fucking money, Barry? And of the 230,000 people who were defrauded by them, one of those people was me. So where's my fucking money? So very, very happy and excited about that one.
Yeah, I mean, I think the only other thing that we could throw on there is the House of Representatives not being able to come to a consensus and how that could lead to a credit downgrade ahead of what, once again, is a potential government shutdown. And yeah, I think that pretty much covers this bull market right now.
All right, we'll see you tomorrow, everybody. No, like, what a shit show it is right now.
Fucked, man.
I mean, my God, like, people just cut back on stuff. Survive and advance. Survive and advance. It is just an absolute shitstorm. Who knows when that is going to change? It's really, really not great out there. So, make sure you have everything locked up because it could get ugly in a hurry. Let's start with Jerome Powell and his comments today. I have a few notes here. Basically locked in the fact that there will be no rate hike in November. I think that's pretty much a certainty at this point. Talking about, policy risks and heightened geopolitical tensions. This is where I get to use much bigger words than fucking shit and sound kind of smart. The Fed is going to be proceeding very carefully, but rate hikes are still on the table if the data warrants it. So the only big piece of data left between now and the November meeting is going to be PCE next Friday, the 27th. Doesn't seem like that could come. Like, it would have to be an unbelievably bad number for them to raise in November. So pretty much locked in there. And, they've also kind of talking about, rates aren't too high or aren't too tight. And he's cautiously optimistic regarding the labor market, citing that we are seeing a moderate reduction, or moderate increase in unemployment rate as well as wage growth, which could help. Now, my problem with I would agree on the wage growth thing if, from an inflation standpoint, companies would act rationally and logically. But as we're seeing with people like Chipotle for raising prices for the fourth time in 2 years, a lot of these companies are kind of like, fuck the consumer. We're going to keep jacking up prices. Netflix yesterday, $23 a month for Netflix. What the fuck is that? And that's like crazy.
We need to get into that with Netflix too, because the reason why they did so well in the earnings is not necessarily a good sign for consumers, I think, at all. They pretty much just, they said no more password sharing, right? Get your own fucking account. People did. And they're like, oh, now that you have a new account, we're going to also raise the fucking prices.
Yeah.
So,
what a dickhead move. Like, what an absolute dickhead thing to do.
That's why they did so
Of
well,
like,
guys.
I
Bullshit.
get that it's a business and they're only looking out for themselves, and you wouldn't expect any different, but still, like, such a dick move. And people are just gonna go with it because, like, it's only a couple bucks more a month, but that shit does add up, and it's good for their investors and the people who, if you bought Netflix stock yesterday when it was eating shit, that's a nice little swing trade you could have had today. Congratulations there. What else? That was really the highlights of what I heard Jay Powell saying. Anything else that you want to add to that?
Yeah, I just want to go into two charts real quick that kind of contradict with a lot of what Powell is saying. The first one will not necessarily contradict what he's saying, but it kind of gives the idea of his optimism in the labor market. And it's something that I think we should be concerned about. So I'm pulling up right now the unemployment rate, right? We know that it's slightly ticking up here, right? We can see that, in the past few unemployment readings, it's gone up. But I want to point this out. See how low it is over here? We're roughly at 3.8%, right? Back in 2007, 2008, we saw that it started to slowly creep up. Like, it was at 4.4% back in May of 2007, and it started to creep up to roughly 5% in December 2007, which is effectively the start of the recession. Market crash happened a little bit later. But we could see that unemployment was just moving up just a little bit. And then once we got to 2008, right around September, let's say that's the crash, obviously it went to 6.1%. We know that it's going up here. So that's not necessarily a good sign. And we know that unemployment tends to rise a little bit into the recession, and then it peaks about a year or so after. We can look back at 2008 once again and see that by the time the market, crash happened in, let's say, September that year, September, October, you can see that by October 2009, it's at 10%. So it peaked completely 1 year after. If that's the case and we start seeing the markets crash, unemployment is going to be a lagging indicator. We're going to find out that the unemployment rate is probably going to peak somewhere, a year or so after the absolute crash of the market happens. So that's something to keep in mind. So even though it's going up a little bit, I mean, there's a good chance that this could be going up significantly in the years to, let's say, year to years to come. So let's keep an eye on that. But the one thing that really struck me was him talking about banks and their liquidity, how he's not necessarily concerned about that. Well,
Also, his lack of concern around commercial real estate, I found to be a bit disingenuous there, talking about how, like, it was going to be a bigger problem for small banks. I don't disagree with that. But I don't know, man. Like, it's getting really bad in commercial real estate already, and we're, like, just getting to the beginning of when a lot of these leases are coming due for renewal, and it's just going to get worse.
yeah, and we're seeing a lot of banks that are trying to cut their losses in commercial real estate, right? Like BMO Harris was trying to do that. Who else was? I think PNC was also trying to cut some of their losses. Citigroup, they didn't want to deal with commercial real estate and not necessarily have as much exposure to it, so they were trying to cut some of those. This is overnight repos, reverse repos, and reverse repos pretty much are a sign that they're injecting liquidity into the system. That's what a repo is, obviously. So what we're seeing here is kind of the opposite of what Paul was saying. That there's a lot of liquidity in the markets, and they feel kind of safe. The fact that a lot of these banks are liquid, and they've been keeping an eye on them. So a repo pretty much just adds liquidity to the system. A reverse repo is where it takes it out. But if reverse repos are going down, then obviously there is some type of liquidity that's going into the markets. It's not a significant amount, but it shows you that there is still a good concern around liquidity in these banks. I don't necessarily buy a lot of what he said today, and this is a pretty good indicator that sometimes the talking head doesn't line up with what the data is. And I think that's something that we should be concerned with. Obviously, we are getting a lot of bank earnings, and we're seeing a lot of things come out. Truist Financial came out today. It's kind of no big deal when you look at some of the earnings, but you can see that, like, consumer credit card debt overdue from like 90 days and more, it's gone up significantly. We can see that a lot of these short-term delinquencies are starting to rack up here. So I think that there is a problem with liquidity. I think that's why the repos might be going up and reverse repos are pulling back. But I think that what he said is a little bit misleading, saying that the banks are financially sound when it comes to liquidity.
Yeah, try going to your bank and taking out any sizable amount of money. That's not going to be a thing. And they're going to get asked 15 questions in the process. Something interesting that happened to me recently. I cashed in, my grandparents gave me a savings bond, like back in the day, like a 30-year savings bond. I had to go like try to cash that fucking thing in, and the bank couldn't do it. I had to like get it notarized. I had to like print off a form, get it notarized, because the banks will only do like 500. There's like $1,000 savings bond. They would only do like $500 ones because they aren't keeping enough liquidity on hand to like cover some of these things. It's like these like really weird
Ridiculous.
arbitrary numbers that they're tossing out for a lot of these things. And like I said, like try to go get $10,000 in cash out of your bank. Like good fucking luck. It is going to be an absolute disaster. Like it's bad. And we talk about like the concern with holding these rates higher for longer. Once again, it comes down to consumers who are already paying incredibly high interest rates on credit cards, on auto loans, on their mortgages. I mean, more like new home sales are down like 15, 16% from last year. Like people are just running out of money and just keep everyone's throwing all these band-aids on bullet holes when we have just like so many other bigger issues that are leading to all of this. But no, it's okay. I'm going to put out the lip service that everything is sunshine and rainbows and that we're going to get through all of this blah, blah, blah bullshit. It's just exhausting. And I'm so tired and fed up with it.
I don't buy anything that Powell says at this point, man. I don't trust really anyone right now. And again, I've talked about this while you're gone. I'm an extremely skeptical person. I don't trust anything that I hear or see, and
You do
especially
trust Peter Schiff now.
my shift.
Peter Schiff.
Oh, Peter Schiff. He's saying the right things. I'll say something and then I'll see that he tweeted about it. I'm like, oh, hey, I agree with you. But yeah, right now I just don't buy it. I know he's saying that, the markets aren't going to raise rates and stuff like that, and that's fine. He's also saying that there's a potential, there's still a possibility that everything's going to be okay, that they're going to go without a recession. I'm seeing everyone say that it's split right now. It's like 52 to 48 economists saying that we're going to get a recession versus we're not going to get one in the next 12 months. I mean, I don't see this market. It seems like it's in a place where it wants to, I don't see this market ripping up higher. That's what in my personal opinion, that's why my thesis is I don't buy the fact that he wants to bring rates, keep rates elevated for higher for longer. I don't know how sustainable that is. He even said that it's not a sustainable way for the economy to continue to grow. It's a matter of time, man. It's a ticking time bomb, and every day that's passing in this month just gives me more conviction, personally, my conviction, not financial advice, that we're getting closer to this point where something's going to break. It's impossible for things to remain this elevated. You're seeing, the consumer is pretty much done for. I don't think the consumer can withstand much more, especially if they're leveraging debt right now and credit. It's just a recipe for a fucking atomic bomb.
Yeah. Speaking of Peter Schiff, have you seen gold today?
Yeah, it went up again, right?
Yeah, it's at 1976 now.
See, man, that's scary. That's really scary for this fucking market right now.
Brent crude is at, oil is back on its way up after dipping down. Like, we got these
243 down in the Dow right now. What the fuck?
So the Dow's down 243.
Yeah, 124 for the Nasdaq and 37 for the S&P. VIX is going to close hopefully above 20 here. That might spook the markets a little bit too. But see, here's the thing. Tomorrow's OPEX, so you don't know how that's really going to play out, because we can get a boring or an even day and pretty much make the week hit or miss by 100 points in either direction.
Yeah, man.
And then I don't know if you saw this too, but the PM of Britain or UK, he went to Israel. So that's another thing where I'm like, markets won't drop significantly until he gets back. There's just too much uncertainty when these world leaders are out. They have to get home safe, and then the markets can drop. We saw that the London Stock Exchange halted almost all of its stocks this morning.
Yeah,
it's a dangerous thing to be seeing, because it happens usually when there is an economic collapse. You usually see that it'll halt trading for the day, and then you start to see short selling being banned. So there's a lot of things that are just smell really fishy right now in this market, and I don't want no part of it. I don't trust anything anyone is saying.
Yep, I would agree with you there. It's funny. I'm like so many like the mainstream like publications. I feel like I'm at the point where I kind of want to like inverse trade some of them. Like some of them are finally saying, oh, headlines. Now it's a good time to take advantage of these 5% interest rates. I'm like, for like storing like treasuries. I'm like, no shit. That was a good idea 4 months ago. You could have started doing that shit instead of keeping your money in the markets where it's just been, bleeding ever since then. Like,
especially like you said with crypto, man, that was a pretty good call so far, Jweb. I can't wait for, what is it? When's the 6 month?
I think like January 13th or something will be 6 months from when I made that call. And I mean, Bitcoin is doing okay since then, but everything else. I mean, let's talk about Solana for a second here.
Yeah,
Solana is having a hell of a day,
it's a
up
little
almost
dangerous.
8% on the day. We're seeing it moving toward overbought on the daily. Where is it on the weekly?
Pulling it
Moving
up right
toward
now.
the overbought territory as well on the weekly. On the monthly, it is also moving toward overbought. So there's Solana's having a hell of a day. Will that
Yeah,
continue? Do you know what is driving all of this movement up today?
manipulation. I,
Manipulation.
I
Okay.
hate I hate to say that because a lot of people are like, oh, that's a sign of a bad trader. Shut the fuck up. All right, this market has been manipulated from the beginning of the fucking year. All right, market's been manipulated since Quadriga, but what we're seeing here, I think, is 100%. I hate to say it, but it seems like manipulation, right? The price is shooting up, but the volumes are extremely fucking low on the daily. Like I can't even pull up the volumes. Like there it is. I had to zoom in like 35 times just to get the volumes to pop up here. But I don't necessarily buy this. I think we're finding, a good level of resistance. This midline up here should be offering a pretty good level of resistance. If not, maybe we get a double top right here at 25.45. But I think a lot of this kind of has to go back. It has to do with FTX, and that's kind of a wild thing to say, but remember FTX had a shit ton of Solana, right? And they had the ability to start selling it. The market pumped and Solana continues to pump, and it seems like all the shit coins are the ones that are extremely manipulated or had some exposure to a lot of the collapse in the past have been the ones that have been doing the greatest. We can take a look at Tron, we can take a look at BNB. BNB hurt a little bit because people have sold off that don't want to deal with it now. Binance has the majority of it, but BNB, Tron, Solana, any other exchange shit coins like TRB and a lot of these other ones, SWE, they're all doing fairly well. And that's, again, something that should be very concerning. I see this in Solana and what's going on here. It's been putting in this massive parallel channel. I mean, regardless of the 5 waves or 3 waves, fuck all that, because sometimes that shit gets invalidated and you have to change your thesis. But this is still in a parallel channel, right? We're finding resistance here in the midpoint of this parallel channel. I think that this is a dangerous place for Solana just because Bitcoin dominance continues to rise and Bitcoin is being the strongest asset against everything else. Solana is just doing pretty well at the same time right now. So if Bitcoin decides to dump, I mean, Solana is going to absolutely eat shit and it's going to break from this channel. We could see Solana go all the way down to, it's going to have to fill this gap right here between $12.68 and roughly around $8.03, around where it was in December of 2022. But that doesn't mean that it's the end of it. I think that, my targets are down here around $4.87. This is just a macro view of it, but I think that this is a massive parallel channel. It's very dangerous, very similar to the one that we saw with Matic that it took a year for it to finally break. I mean, I just think this is a matter of time before we start to see some negative price action. I can't give you one bullish reason why Solana is going up unless it's liquidations or they're just trying to sell from higher. And I think that's the case for a lot of these exchanges that are extremely, exposed to a lot of these coins that maybe aren't worth as much as people think anymore since the market is down significantly.
While we're on kind of the subject of what happens with Bitcoin, let's look at Bitcoin dominance real quick.
Yeah. It's kicking
That,
ass, right?
that one is kicking ass up over 52. I'm looking at it on the monthly, just kind of like, because it's been overbought since March. But then I look back at previous cycles and we can see like from June of 2018 until February of 2020, it was overbought as well. So to think that this can't continue for, another year would be incorrect because we've already seen that happen before. So I'm just kind of interested here, like, what do we think happens if this continues to stay in the overbought territory? Like, where do we see this headed towards in the midterm?
Yeah, absolutely. So this 52% level or 52% level is extremely key. If we start breaking that level of resistance, then we're going to start going up higher, testing, resistance much higher. And I think that we have a pretty good gap here between 52 and 57. That's why I've always been kind of bullish on 57%. We can also see that it's been support in the past, resistance in the past as well. It's just an important level for Bitcoin dominance. So yeah, it could stay overbought here in the period for a good amount of time, right? It can stay in this level. And again, we're talking about months here. And the thing with Bitcoin dominance isn't necessarily something technical. Like, yes, it is technical to some extent when you look at this chart, but it really comes down to what the market's doing with Bitcoin and these other alts, right? Where money's allocated in certain assets as opposed to other assets. And I don't see I don't see a world right now where there's going to be the same inflow of money that goes into Bitcoin that flows into alts. I think right now it is 100% Bitcoin's market. There's a few that are doing well, like we said, with Solana and stuff like that. But I think that this could easily go to 57%, given what we're expecting. And I was texting you in house earlier today about a lot of the money that's going onto the exchanges right now. A lot of it was stable coins, and it's like TUSD, USDT that it's going to Binance. Some of these other exchanges have seen a lot of money flow on, but then you're seeing Coinbase where people are they're absolutely flooding it full of Bitcoin and Ethereum. So in some way, I think that we're kind of in this battle of supply versus stables. And how does that impact Bitcoin dominance? Well, if Bitcoin's price starts to drop because supply starts to, rack up on these exchanges and no one's willing to buy it, well, then Bitcoin dominance is going to go up regardless because, well, a lot of people are going to not be exiting their positions. Maybe some people feel like Bitcoin's going to be a safer asset than others if it does continue to drop. Maybe some people try and buy the dip. I think that Bitcoin dominance is going to just rocket up. Stable coins, I don't know if there's going to be enough to eat up all that, that supply. It's probably a few billion I've seen today that's gone onto Binance between TUSD and USDT. So if that's the case, Bitcoin drops a few billion, I mean, that's going to be more than what they can eat up, and the Bitcoin price is going to go down. Dominance is probably going to rise. I don't know how stables are going to react. Maybe USDT goes up in value because people are selling off. But compared to how other alts bleed out, I mean, Bitcoin dominance is probably going to just keep going up regardless of price. So I think this is a very dangerous place right now. We're going to see how this reacts. But getting above this 52.21 level, which is the 50 moving average on the monthly, I mean, I think a few closes above that, and then even on the daily, right? We're above the 50 moving average and the 200 moving average. We can just keep climbing up this, hopefully seeing, some massive price discovery, or not price discovery, but just the percentage of Bitcoin dominance over other alts just continue to rise up because there's not a lot of resistance rate around this area. Kind of shut down real quick. It's a good chance that it could just go up just as quick too. So it's kind of a clusterfuck, money going back and forth. It's trying to find out how it's going to impact assets. But yeah, I'm bullish on Bitcoin dominance. That's one thing I'll say. Can't really trade Bitcoin dominance, but you can definitely use it as a metric.
Let's go ahead and look at the charts for Netflix and Tesla before we wrap up today. You dealer's choice there on what order you want to go in.
Let's do the Ponzi first. Netflix.
Yeah,
absolutely insane. So I'm
also hello to our friend Scotch and Stocks, our guy Randy. Appreciate you two being here for sure. But yeah, go ahead into this Netflix chart.
Absolutely. So yeah, this is pretty shitty chart, right? We can see, I mean, this was the gap that we were anticipating that it was going to come up to and test. Went right through it, just plowed right through this. So we can delete this right now. This was between 385 and 383. We already hit that on the way down, and we can see that there's a massive gap here on the daily that just shoots up here. Like this chart, if you were just looking at this, just without context, you'd be like, "What the fuck happened here?" Well, there's a massive gap, so we got to fill that. So I'm gonna get my rectangle. And we're going to see that very similar to NVIDIA. When NVIDIA did extremely well a few months back, it created this massive gap to the upside. But however, these things need to be filled out. Like this doesn't rationally make any sense that it shot up $57. I mean, yeah, that's the market. I think it was a bit of a squeeze, if anything, because so many people were shorting Netflix like crazy. But for it to shoot up that much, that's quick, and that's the squeeze. Well, then I think that there's going to be people who are going long here that are going to be disappointed to find out that, okay, now we're going to short this and bring this price down. I think somewhere we need to keep an eye on is between this 50 moving average and this 200 moving average. We can see that there's still room on the daily to the upside. We got 33 minutes. I'm pretty sure that this is going to be a lot higher on the stochastic RSI, especially with that move today. I mean, if it doesn't move off 16.73% up on the day, then I don't know what's going to move the stochastic RSI. But this is a pocket of liquidity that will be looked at for a lot of people to tap and hopefully try and get some money out of the market for people who are longing here. I think this is a very dangerous stock. I'm not touching it, but I do think that this is the type of thing that's going on right now, this type of move, this desperation, where the news not necessarily is great, good earnings, but it's not great news for consumers. I don't know how it's going to be going forward for them, but I think that this is a thing where, maybe it stays here elevated for the rest of the week, but come Monday morning or sometime next week or the week after, there's a good chance that we can start to see that price start to pull back once again. So I'm not necessarily buying this move here, and if this is the case, this is still pretty. This wouldn't be a 5-way move here. This would be, I'd have to reorganize a lot of these lines. So we'll get that set up next time we show up Netflix. But I definitely think that this is just going to be grabbing a lot of this liquidity that are in these gaps down here. Nothing really has changed too much in the front with Netflix, in my opinion.
All right, then let's do Tesla, currently down a little over 10% on the day. The news that the Cybertruck is going to begin shipping at the end of November was not enough to prevent an absolute kick in the dick to Tesla.
Yeah, I thought that was pretty good news. I'll take the Cybertruck right about now.
Listen, my lease on my truck is coming. Is going to be done in like March or April of next year. So maybe I'll look at a Cybertruck.
I like the truck. I think it looks cool as shit. I just played RoboCop, the soundtrack of that movie as I drive around. How could you not love that vehicle? But yeah, this is Tesla in a nutshell. You can see that it is down significantly. And by significantly, I mean it's down bad. It's down below the 200 EMA. It's where it opened up today. So again, just so I could be not a hypocrite, we have to understand that there is a gap here now, right? Let's just do this to be conservative. I don't know if it's going to fill this gap. I'll be honest with you. This is a pretty bad move down, and I don't think the stock is going to respond well to earnings that it got. But hey, we're below the 200 EMA, which means that the 50 is going to start crawling down closer to 200. 200 is going to start following. Might get a death cross on Tesla on the daily, not in a not so distant future. Again, this is one day. We got to see how it reacts, but down 10% on the day, not good. This is another thing where we're finding support maybe on this A wave that was within that 3-way move to the upside back in February of this year. If we start losing that, then obviously we're gonna have to try and find support a little bit lower. Maybe that's somewhere it's down deeper. I'll just say it that way. Obviously, we're anticipating this to be one massive ABC correction. I think we talked about this a little bit yesterday when we were on the show. But one wave down, one wave up, and now we have to finish this off with a little bit lower than the A wave that we put in back in January of 2023. So the target remains for me. It's been $64, $65. I'll say 64 because it's probably closer to the actual level of support right over here. But, I think that we are putting in a pretty good move down right now. What happens in the coming days, maybe it comes up to test the bottom level of this, but we get rejected off that 200 EMA. And again, consistent closes below that. The 50 is going to keep crawling down there. We're going to get a death cross in that scenario. And, I don't necessarily think that if people are buying Teslas now, then they're probably not going to be buying Teslas anytime soon, especially if the stock keeps plummeting here. So I think this is a matter of the greater global economy having an impact on consumers. It's not necessarily anything that Tesla can do to save this at this point. So we'll see how the price reacts, but I think that the trend right here is to the downside, and that open below the 200 EMA today was pretty telling sign that we're probably going to see a lot more downward price movement in the coming weeks to months.
All right. I think that is a good place to wrap it up for today. We'll be back same time tomorrow, close out the week, see how the markets are reacting, options expiring, all of that good stuff. So thank you everybody for watching. If you have not yet, hit the like button down below, subscribe to our channel. We will, we'll be back tomorrow. Like I said, drop some comments too. Share us out on social media. All of that good stuff is appreciated. But I hope you have a great day. Hope you're staying safe in these markets, avoiding some of the pitfalls that a lot of other people are falling into right now. And we will see you back same time tomorrow, everybody. Have a great one.
Take care, everyone.